Hey, this is Amy McGrady, your premier real estateologist, back at you with another video. I know it's been a while, but it is what it is. But I have an interesting video for you today. It's not one of the evergreen videos. It's about a hot issue going on in Florida. But before I start the video, I want to remind you that I am your real estateologist. I would ask you to subscribe to my channel, hit the little like button, and even share the video to help my algorithms get some traction so that more people can see the videos if you like it. If you don't like it, you can tell me that too. It's been a long day. It's the evening. I'm in my dining room and I'm doing some vids. But anyway, as some of you know, if you follow my channel, I call myself the real estateologist because I was a real estate attorney for 30 years. 15 years in Miami, 15 years in Lauderdale, and then I finally got out. But you can't take the lawyer out of this head. So I have the legal side. Now I've dipped over onto the broker side. And I like to say I'm out of the office and into the streets, but I'm still bringing you the information that I think you might find valuable. So the topic that I want to talk about today, or the question that I want to figure out is, what is up with this Florida homestead or tax proposal? Right? It's been crazy down here in Florida in the headlines. If you're not from Florida, you're probably not hearing it, but you may hear little snippets on the national news. And some of the sensational snippets have been, there's not going to be any homestead or property taxes on real estate in Florida. Forget it. If you heard that anywhere, forget it. It's not happening. We have to have taxes. Now, there are going to be some significant changes, I believe, to our real estate tax structure now, and that remains to be seen how much. We have had a lot of changes. Actually, a big thing just happened on June 2nd. So this right now, I'm in the middle of June 2026. June 2nd, 2026, the Florida legislature did approve a proposal for the constitutional amendment that has to be enacted and approved by 60% of the voters before anything can happen. So we've been talking about this since early 2025. Governor DeSantis, I think like 13 other states are bringing up this issue and deciding on this real estate tax issue. He brought it up first like no taxes, and then everybody was like, well, what are you talking about? We need taxes. We need to fund schools, police departments, parks, all the infrastructure, the sewer, the sanitation. Like, there's so many things that taxes pay for in a civilized society that we need to collect the taxes. Sorry, none of us like paying taxes, but it's what you have to do because all these things that we need in our civilization and our communities cost money. Police officers have to get paid. Firemen have to get paid. Fire people, I should say. Anyway, so you get the picture. So what's up? I'll tell you what's up. First of all, at least we've gotten a little bit further. So generally in Florida, for there to be a big change on Florida taxes, whether they be reduced or eliminated, it has to go through a whole procedure. First, a specific proposal must be finalized. That looks like that's been done now as of a couple of weeks ago. Then the Florida legislature must approve a constitutional amendment. That was done as well on June 2nd. Then the final impact must be analyzed. Okay, so it's going to be analyzed. Lawmakers need to determine how much revenue would be lost by either eliminating or reducing taxes, which local governments would be affected, and how schools, police, fire rescue, and infrastructure would continue to be funded. I'm not sure that they've completed that analysis, but they must complete that analysis before it goes to the voters. And then the Florida voters must approve this amendment by at least 60% voter approval statewide in order for it to pass. And then even after the voter approval, lawmakers would still need to create the detailed rules governing who qualifies for the exemption or increased exemption, what taxes are affected, so is that school versus not school, that's been determined. How local governments are funded, that is a mess right now. And when the changes become effective. In the proposal, there are some changes on that. So, or some timelines on that. So I'm going to go over in this video just kind of that timeline a little bit. A timeline how we got here. I already told you what has to happen before it can even start. And then I'm going to keep this video positive, and we're going to talk about all the good things that could happen if the change happens. Now, if you stick with my channel and hit that notification thing, you'll get notified when the next video comes out, because the next video, I'm not going to be as positive, and I'm going to talk about what the possible unintended consequences of this change could be. Let's first start with, before we get into all the happy things, what the proposal actually does. The proposal that just passed a couple of weeks ago. We're going to separate the proposal and the facts from the headlines here. So, phase one is an increase in the homestead exemption, and they're going to phase that in. So the way they're going to do that is phase one, beginning January 1st, 2027. So remember, the voters are voting on this in November 2026. If it votes in, real quickly comes January 1st, 2027, and what's going to happen is the homestead exemption would increase to approximately $150,000. So if you have a property worth, easy example, if you have a property appraised by the property appraiser at $200,000, then you're going to be taxed as if the property is appraised at $50,000 because you have $150,000 exemption. And then phase two is beginning January 1st, 2028, the homestead exemption will increase again to approximately $250,000. School taxes remain unchanged. So when we get our tax bill in Florida, it comes in, it itemizes what goes to school taxes and what goes to infrastructure and things like that. So that school tax section will stay the same. It's not going to be affected. So we're going to pay full boat on that, which is good. Another thing that this proposal does is it reduces the assessment cap on non-homestead property, because a lot of objections were brought up about non-homestead property, specifically investors. They'd be carrying the load, so to speak. So they got some relief on this proposal as well. Investors did. Currently, investors have a cap of 10%. So non-homestead property, if you own warehouses, multifamily apartments, even down to duplexes, triplexes, quadplexes, retail shopping centers, commercial property, basically non-homestead. If you own that property type, your taxes can, under the current law, increase as much as 10%, but there is a 10% cap. Under the new proposal, those property types and taxes could increase up to 5%. So that cap was reduced from 10% to 5%. So that's some relief for the investors, and it has to be because Florida relies on investors and investments and development and so many other, and tourism and all the things. So they got some relief. It remains to be seen. I mean, everybody's talking about, well, if you're going to take it from here, if you're going to take from one hand, you have to pay with the other. And the big thing is, are the sales taxes going up? Are the tourist taxes going up? We don't know. It hasn't been explained yet. All we know so far is what I told you. Homestead exemption's going up, and it's going to go from 2027 up to $150,000, and then 2028 up to $250,000 from the current $50,000 that we have now. Then there's another provision that's receiving a lot of attention. It involves existing Florida residents. Under the proposal now, the homeowners already established in Florida before a specified date may receive the enhanced exemption immediately. Future Florida residents may have to wait before receiving the full benefit. So that needs to be fleshed out before Election Day. It's really not clear on that because it could really be a problem, and we'll talk about that in the next video. But let's be happy now, and in this video, talk about why supporters of this amendment are excited. Well, the first obvious one is lower property tax bills. Duh. You know, if your property's appraised at $200 and you get $150 exemption, then you're only paying taxes as if your property was appraised or valued, assessed at $50,000. Your taxes are going to be lower. Benefit number 2, there's a big contingent of people that have pushed for this that are really advocating for retirees and senior citizens and people on fixed income, because the property taxes have been increasing a lot, because values have been increasing a lot. So supporters believe that this proposal could help seniors remain in their homes longer. Because insurance costs go up really right now in Florida. Back in the day, when you looked at your mortgage payment, PITI, principal, interest, taxes, and insurance, we used to always pay attention to the principal and interest part, how much we're paying the bank, because the taxes and insurance were just, a small part of that. Well, that's flipped now. It's, in many cases, the taxes and insurance portion of your monthly expense on your home can be as much as and more than the principal and interest you're paying to the bank on the loan. Crazy. So that's why this has happened. So benefit number 3, some people claim that if more money stays in people's pockets, they'll spend more money in the economy. So basically, less money to the government, more money flowing back into the private economy. Benefit number 4, stronger homeownership incentives. So the proposal provides additional benefits to owner-occupied homes and reinforces Florida's long-standing support of homestead protection. So that's pretty basic too. And still, your investors and your snowbirds are still going to have the benefit of having a reduced cap from 10% to 5%, so that's good. Benefit number 5, the protection for investors and commercial owners. We talked about that, the cap going from 10% to 5%. Now, those are really all the positives that I could find and that I have heard. If you can think of any other positive effects from this proposal, put it in the comments, because I read all the comments and I'd love to hear from you. I'm going to go into here. So what happens next? Well, nothing happens today. Nothing changes next month. Nothing changes automatically. And before any provisions become law, the amendment must appear on the November 2026 ballot. 60% of the Florida voters must approve it, and only then would implementation begin. So now they have to do the rules and the regs and all the things to make it happen. And each department has to figure out how they're going to make that happen. And each local government is going to have to figure out how they're going to pay the bills. But I digress. The point is, my real estateologist take on all this is that this proposal represents one of the most significant property tax discussions that Florida has really seen in decades. And the potential benefits are easy to understand. Lower taxes, greater affordability, more protection for homeowners, more protection for seniors. But remember, every major policy change deserves careful study. And every benefit has a cost. So that's why I'm leading you into the next video, which is what are the unintended consequences of this proposal. Until we get to that, I thank you for listening. And let me know in the comments, do you support increasing this homestead exemption? Would this proposal make a meaningful difference for your family? And if you have any other questions, put them in the comments. I'll research it. I'll call you. I'll email you back. I'll just shoot you back comment to comment, reply to your comment. And that's that. So don't forget, subscribe if you want to see part 2. We're going to look at the unintended consequences of this change to the Florida real estate homestead tax. Deuces.